What is good, Tesla family? It's Ray J back with another video, and in this I'm going to be talking about the one and only Tesla stock and what you should be looking out for the future. I'm also going to break down what's going on with the overall market and how this may affect Tesla and why tomorrow is going to be an absolutely massive day as we have CPI data coming out, so it's going to cause a very volatile move. I will break down how this will affect Tesla and why you should be very prepared for crazy price action. Before I break anything down about all of this information though, before I give you guys any price predictions, and talk about some important details about CPI and Tesla's data right now, I do have to mention a couple of things before starting. Firstly, I'm not a financial planner. Make sure you take none of this as financial advice whatsoever. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire Tesla community as a whole. And the last thing is, if you guys can, please check out the Moomoo link down below and in the description. If you sign up for Moomoo, the link down below, and deposit $100 into the account, you're guaranteed up to 10 free stocks, each worth up to $2,000. And the best part is, any could be a free Tesla share. The offer ends in just 2.5 weeks. Check it out before they run out. With that out of the way, let's get on with the video. So Tesla was down 1.54% for the day. In my previous video, I predicted we'd see a sell-off in the market for today, and that is what ended up happening. Tesla did retest 166 as I predicted, bouncing off the 1 hour 200 EMA, and Tesla did close right below 170 as predicted. I told you SPY would likely come down to about 410. And also the QQQ would have a somewhat red day too. The QQQ held up a little bit better than I expected, but it did close red just like SPY and just like most of the market. If you look at NEO, it came down as predicted. So did Microsoft and many other stocks. The VIX got a bounce too, and the SQQQ did see a bullish divergence that led to a breakout today, as predicted from yesterday. But the question is, what's going to happen for tomorrow, and why did the market do this? Well, we saw a lot of hedging, obviously, and repositioning. We saw lots of choppy price action as algorithms were taking over price action and trading. And typically, before these big events, we tend to see the market sell off. It's selling off because of CPI, which is coming out for tomorrow. I'm going to start off this video by breaking down CPI and some important data about it. Then I'm going to talk about Tesla. But for now, please note that we have CPI data 1 hour before the market opens. We're going to have the month over month and year over year data sets. We have inflationary data coming out as CPI itself, and then core CPI is coming out, which is just CPI without food and energy. Now, we have some gas data coming out, which is not as significant, and the whole market is going to respond to this. It's going to have a very big ripple effect on the whole markets. Tesla's going to be affected, Microsoft, Apple, SPY, QQQ, the S&P 500. Everything is going to be impacted by this. Make sure you are ready for the crazy volatility for tomorrow. And we had some Fed speakers today. I just want to briefly note that some of the Fed speakers are still warning about a more severe recession than expected. They didn't really use that wording, but they did imply it, because we had Williams come out and talk about a tighter financial credit market that's coming. And they mentioned that there could be more pain for banks. Okay, the market did not really tank off this news. The market was just trading in its range for the majority of the day. But this is still very excuse me, sorry guys. It's still very important that we note this and we are ready for what's to come going forward. Now for CPI, let me just note that this is what the data looks like so far. The latest data that came out was the month of March, right? This came out in April. In the middle of April, the data for March came out. And now for tomorrow, right, which is May 10th, we have the April data coming out. As of right now, this is what the chart would look like for CPI. It's been on this big downtrend. You just have to remember that this does not mean prices have been dropping. All it means is the rate at which prices are increasing is going down. So instead of prices going up by like 10% or 9%, like from June of 2022 on average, we're actually seeing about 5% right now. So they're going up by 5%. So they are increasing, just not as fast as before. This data is also very skewed and it's heavily impacted by energy and housing. So CPI itself is not the best way of looking at data. We have to look at the specific details within the data set that's more important. So look at food, utilities, and many other things like that. Now, here's the thing that's very concerning. The purple line right here is core CPI. It's been upticking a bit recently. Why is this important? Because looking at the factors excluding food and energy, we're seeing an uptick in inflation. This is super important for the entire market. As inflation continues to uptick, there is a risk of the Fed having to continue to remain hawkish. There's a risk of a more severe recession, and there's risk of more hardships for everyday Americans. So I also want to note that if you look at this from a bar perspective, this is core CPI. It was downtrending quite a bit according to the data from, I would say, like from September going into about February. But after that, we got the first uptick, and I believe there are likely going to be more upticks in inflation going forward because of what's happening with OPEC Plus and their production. The oil is going to start going up, and then production is going to be cut, leading to less supply of it. And we're already starting to see gas prices going up, right? CPI is very delayed data, so we're not going to see it reflected in CPI for a while. But I'm seeing many signals out there that are telling me we're going to get a hot CPI soon. Now, is it going to be this CPI specifically? I mean, it could be. The odds do favor that, but it's not guaranteed, of course. But I believe that it's very likely that at least one or two of the next three CPIs that come out are going to be hot, and it's going to lead to a rug pull in the markets. I'm seeing more and more signals of that, and I think it's very likely. And many people could agree once you look at the surveys. Now, what are we expecting for tomorrow? Year over year, we want 5% CPI, which is the same as March. Month over month, a 0.4% increase for just CPI is what we're expecting. For a core CPI, we want 5.5%, a little bit lower than March's numbers. And then for core CPI month over month, that's 0.4%. What does this mean? If this data comes in a little bit hotter than expected on either end of these, okay, either end of these, the market's likely going to pull back or even get a severe rug pull depending on how far we are. If we get the numbers and they're as expected or lower than expected, the market has a better chance at holding or even continuing to rally. But looking at the data, the odds are favoring that very soon a hot report will end up coming. To start us off, if you look at some data from the Federal Reserve of New York, they're seeing from their surveys, inflationary expectations are just going up very hard. People are expecting another increase in inflation. This is the first big increase since October of 2022, and median inflationary expectations have increased by zero point 0.1 percentage points. People are expecting another uptick in inflation. This is actually very common because during the summertime, we tend to see inflation spark up. I also believe it's important to note that expectations tend to be uh, reacted with quicker reactions in markets. What that means is if a lot of people are expecting gas prices to start going up, and maybe gas prices aren't the best example of that, maybe like phone prices or something else that is more impacted by everyday people. But if people are expecting a big increase in prices for like the longer term future, economics tells us based off current monetary policies and economic theories that we're likely to see an increase for the shorter term because of consumer behavior and the effects of their spending because of this. So it's very likely we're going to see a big uptick in inflation. I also want to mention that the Fed was very suspicious during the last FOMC meeting. Jerome Powell mentioned that a pause could be coming a couple of FOMC meetings ago. He said that, I think, during the January meeting. And what happened was during this meeting, he didn't even mention a pause. Not even, he didn't even say pause, right? All he said is he doesn't know, right? We have to look at the data. And the market is so confident the Fed's going to pause soon. So I find a very interesting discrepancy right over here. And I'm starting to think that the Fed might know something. They may know that either this CPI or the next one, the one after this one, so the one coming out for June, is going to be hot. They might know that. And that could be why they did not announce a pause yet, because they know they may have to give us another 25 basis point rate hike. Just a possibility, just a tinfoil hat conspiracy theory if you want to go that route, but it's a possibility. Now, gas prices are up 18 cents compared to the previous month, and we're likely going to see a bigger uptick for May as gas prices are going up for the collective USA. Food inflation tends to increase during the summertime. If you look at the data from like the last 5 years, you could quite clearly see that. We tend to see it increase. I don't know why this isn't working. But anyways, we tend to see it increase during the summertime. If it happens again, that could negatively impact CPI itself. So most pieces of data are suggesting, especially housing, that we might see an uptick in inflation very soon, possibly during this meeting. At least the odds do favor that. So be ready for that. Before I break down the trust, let's talk about Tesla just briefly. we have some good pieces of news that came out. They have teased a new Cybertruck accessory, a tool rack, and it's very, very awesome. I think a lot of people are very, very excited about just these little quirks and features within this vehicle. I think people are just loving it, and I think it's going to be a big hit when it comes out. And I believe it's going to positively impact Tesla's share price when the day finally comes. But if the market pulls back first, Tesla still could have downside for the medium term before we start to see better price action later on during the Cybertruck era. Now, I also want to note that in Europe, the Model Y has been selling like crazy. It's actually the top selling EV in Europe going forward, at least for Q1. And this is likely going to continue. Now, I've been prioritizing the Model Y, looking at data for that, but we do have some concerning pieces of data from other models. But I'm going to talk about that in just a few minutes. The Model Y was also ranked as the third best selling passenger car in 2022. Another great piece of news. And the large majority of Tesla sales are really just Model Ys and Model 3s. That's the reason why I talk more about those. But, anyways, now let's talk about this. Going into the data, I'm not as concerned about the inventory levels of the Model S and the Model X. They don't sell nearly as many as the Model Y and the Model 3s. Looking at it, they are relatively high, but they've been kind of high earlier during the year too. There were some instances where they came down, but they tend to have higher inventory levels than other models. For the model, this is the X. This has been on an uptrend as well. Uh, but the thing is, these don't sell, like I said before, as much as the Model Y. So I'm not as concerned about this. Yes, I would prefer this being a lot lower, but like I said before, inventory levels are around like the 1200 mark, and they used to be around like the 600 to 400 area. So there is an increase, but because this model is not as impactful for Tesla's deliveries as the other ones, it's just not as concerning as I would say this. The Model 3 has a very sharp increase in inventories, not looking too good. This would be a pretty bad piece of news, but the good news is we're seeing a big drop in the Model Y inventory levels. So the data is very mixed for Tesla, right? The Model 3 is their best selling EV. So it tells me that overall, I mean, it's just very mixed. There is a good chance they can meet expectations for deliveries, but we need to see them continue to sell more vehicles, especially for the Model 3. Now, as the summertime comes, we tend to see more of these cars getting bought up. So I'm hoping that by Memorial Day, by that time frame, we start to see the Model 3 inventory levels drop. Production is playing a big role in this too, but it's not everything. And there clearly was a demand issue for Tesla, which is why they cut prices so much. The price cuts are not helping as much for the Model 3, but they are heavily benefiting the company for the Model Y. This is just a matter of a waiting game. We'll see how this goes. For now, the data looks very mixed. This is very good. At least the Model Y is good. The Model 3, a little bit concerning. Now, for the price price ratio, this is still very flat. You can see right here, it tried to bounce. Tesla's share price is still underperforming just a little bit compared to before. Also, many analysts are saying Tesla will outperform the markets. I'm not too worried about these pieces of data because tomorrow is a very special day. And the short interest is very, very consistent. Not a whole lot going on. Tesla lacks volume. That's a bad sign. Only 88 million in volume. But I'm expecting more volume during either a big event or because of tomorrow because of CPI. Now let's break down the charts going forward. What am I seeing for the markets? Well, you have to remember that there's always a bullish and bearish case. And I'm just going to talk about a couple of tickers today, guys. I'm sorry about that. I'm not really feeling too well. I didn't really sleep last night. So I'm just going to talk about a couple of tickers, just SPY, QQQ, and Tesla, and just a couple of others. But for now, there's a possible inverse head and shoulders like formation. If it's going to be symmetrical, we could see SPY come down to 408 and then try to bounce off that. If CPI isn't that horrible, uh, if it's slanted, then it could try to bounce from here if we get a very good CPI. That would be a more bullish case. A more bearish case would be that this could be just a trap, trying to trick people into thinking the market's going to bounce and we're forming this bull flag. Instead, they just rug pull us. That could also be on the cards because patterns and TA are not everything. They're not as impactful during a big event like CPI. The market is simply going to react to CPI, and that is simply going to be the bigger factor here. So that's why I'm not as concerned about this pattern right now. It could play out if the data supports it. If not, then be prepared for anything. Now, the bullish case for SPY would be a break above to the upside and this thing going towards 414 to 420 eventually if we break to the upside off a very good CPI. The bearish case will be SPY breaks down and retests 408. If that fails, it's going to go all the way down, not just to, I would say, like 405, but maybe 403. So a big rug pull will come if CPI is hot. Now, what do I think is more likely? I'm personally going to try to be unbiased. I'm always properly hedged during events like this, which means I have both puts and calls. I'm not just betting on one side, and I have longer dated options because the shorter dated ones are more likely to be prone to IV crush, killing their premiums almost overnight. So here's what I'm seeing. I'm open to any possibility, but I think the odds favor downside, considering that inflationary expectations are up, and there's a high probability of one of the next CPIs being hot. All right. Does it have to be this one? I'm not as sure, but I think it's very likely it might be because of the gas prices and the data with the food. So we might see this cause a rug pull in the markets for tomorrow. We might see SPY come down at least to 408 or lower. But I'm always open to any possibility just in case. I'm just telling you guys what I think is more likely. Now, for Tesla, Tesla is very different. Tesla has a bullish divergence that's developing on the RSI, but it's still developing, so there's no guarantee it's ready to bounce just yet. As long as it holds the 200 EMA, then it could be valid. It will be valid if that's the case. If it breaks the lows from today, then it could invalidate it. The ME, excuse me, the MACD is also forming this bullish divergence on Tesla, and on the 4 hour time frame, I mean, we're about to get a crossover on like the 1 hour. On the 4 hour, it's looking a little bit weaker. It's barely holding the 50 EMA for now. So very mixed data, but it looks more bullish on a technical standpoint. This, from a technical standpoint, it's telling us that Tesla's going to either pull back here, then try to bounce, or it drops a little bit more and then it bounces later. Like a little bit later, maybe a day or two after, depending on how long the divergence takes, as long as it's still valid. That's what this data is telling us. That's what this technical uh, pattern is telling us. However, here's the thing. Like I said before, TA and patterns are not everything during CPI. CPI could cause something completely ironic. And that's the reason why I'm just going to try to not worry too much about this formation and worry more about what could play out because of CPI. Now, if CPI causes a push up, then it could support this TA, this technical analysis. And then we could see Tesla fly to 174 to 178 if it breaks that. If we get a very low CPI, if CPI is good CPI is going to cause Tesla to pump. If it's a bad CPI, if CPI is harder than expected, Tesla's going to break down to 163 then 160, if not even lower. Okay? Now, what are the odds favoring? As I mentioned before, it's a little bit more likely we get a hot CPI. And if that truly happens, we might see Tesla break below the 200 EMA on the 1 hour time frame and come all the way down to 163 to 160. However, I'm not extremely confident about that. I'm not like so fixated on just one direction. I'm open to anything, and you need to be open to any possibility as a trader or investor. But like I said, I think it's a maybe a 60% chance that we get the downside and a 40% chance we get the upside. Both are possible, but I'm leaning a little bit more bearish on this report. For Coinbase, if we're bullish, it's going to break all the way up to about 62 plus. If we're bearish, it's going to come down to 58 then 54. Once again, guys, I'm open to any possibility, but I'm leaning a little bit more bearish based off the data I showed you. The dollar is pretty flat, not really doing a whole lot. If it continues to break out, however, this could lead to some bearish price action. So far, it's on an uptrend. It has not invalidated this yet, so I'll be very patient on that. For NEO, if we're bullish, 8.5 will come. If we're bearish, it's going to be 7.5. I'm open to anything, but I'm leaning a little bit more bearish because of CPI and other factors. The HYG is telling us the market has smart money, or the institutions betting on more downside for the market. They're not agreeing with the rally we saw over the last couple of days. They were selling and selling and selling. So there's no guarantee they're correct. There's no guarantee that this means a drop will have to come, but it is leaning in that direction based off what these bonds traders are doing. For Microsoft to turn bullish, we're going to be watching 310. For bearish, it's going to be 303 to 300. Once again, guys, I'm open to anything, but I'm leaning a little bit more bearish. That's just my prediction. For the QQQ, if we're bullish, it's going to break out to 324 plus. If it breaks to the downside, it's going to come all the way down to the 200 EMA, if not come all the way down to 315. In my opinion, I'm currently open to anything, but we do have a bearish divergence that developed. It is still, dropping. There's no guarantee it's done dropping yet. So this bearish divergence could be telling us that there's more downside to come because of CPI. We just don't have confirmation of that move yet. And that's the real problem I have with the TA on this. So I'm open to anything, but I'm leaning a little bit more bearish for tomorrow. I'm just leaning in that direction. I think the VIX could go either way, but we have this gap up here and it held support so far. We also have a bullish crossover on the PPO. Yes, technicals are not everything, but if we do get a hot CPI, we might see the VIX fill this gap and cause a pullback in the market again. Not saying this means the market has to just crash really hard, but I am saying that it's very likely the market may pull back. Amazon pushing up. I predicted that Amazon would actually cool off a little bit and just trade sideways. Instead, Amazon outperformed the market and did a little bit better. So Amazon was very ironic and a little bit different from what I thought. Now, if Amazon continues to react this way, there's a possible bullish triangle developing. So it could try to break out very soon. If we're bullish, try to get closer to 110. If we're bearish, it's going to come all the way down to 105, then 102.5. I'm leaning a little bit more bearish. I think Amazon's going to come back down to 105 and 104, but depends on CPI. For Nvidia, it did almost exactly what I predicted. I was predicting this thing would come down to about 285. If we're bullish on Nvidia, it's going to try to break out all the way up to about 292. For bearish, it's going to come all the way back down to about 274 to 272. Now, from a technical standpoint, this is almost looking like a head and shoulders like pattern developing, but these are not always valid. I also want to note that not really seeing much of a divergence. I think there was a bearish divergence here that developed. I'd have to double check it. Actually, it's been invalidated, so I'm not seeing that. But this looks to me like a topping process was forming. We have a bearish cross, a very bearish cross on the PPO, and on the 4-hour time frame, it's about to form. So this is looking more bearish to me, if anything, from a technical standpoint. And in my opinion, CPI is leaning more bearish for the outcome of the markets. So we might see the market cool off a bit, and I think Nvidia might do the same thing. For Apple, Apple is also looking a little weaker. We're getting a bearish cross on the 4-hour time frame PPO. It's losing lots of this momentum. If it's bullish, just hypothetically, okay, if we are bullish somehow, it can make its way up to 174 to 175. For bearish, it's going to come down to about 168, if not 166 or lower. Now, seeing how overextended it has been and how much weaker it's developing, it looks more likely that this thing has, hit a top and it's going to start downtrending a bit to cool off the RSI and just once again, because of how overextended it's been. So I'm leaning more bearish on Apple, and I think it might get dragged down thanks to the market. Google, this thing came down to about 107.9, a little bit above my target. I thought it would hit 107. Google, if we're bullish, 110 will come. If we're bearish, it's going to be 104. I'm leaning a little bit more bearish, so I'm prepared for anything, of course, but I am leaning more in the bearish direction. Last but not least, just Netflix. Let me talk about Meta than Netflix, just real quick. Meta was very flat, didn't really do anything, just chomping around, getting ready for CPI. It's almost about to get this crossover on the PPO, but there's not a whole lot going on here. There is a possible, there's not really any divergences for me. There's not really anything significant going on with this. Just chopping around a bit, trying to stay above the 50 EMA. If we're bearish, it's going to come down below 230, all the way down to 225. If we're bullish, it's going to make its way up to 240. We're stuck in the middle. I'm still leaning a little bit more bearish, though, because of CPI, but I'm always open to any possibility. The 10-year Treasury yield is very flat, it's not doing a whole lot. If it pumps up to the 200 EMA, it might fill the gap. If that's the case, that could become more bearish for the markets. Netflix, pretty flat, didn't really do anything. I am still anticipating that it could cool off a bit. For now, it's just very, very flat, trading sideways. So we'll be patient on this. But anyways, guys, I just want to thank you all for listening. Please have an absolutely spectacular rest of the day. And let me just note that I'm not a fortune teller. I really don't know what CPI is going to bring exactly. I just think the odds favor it upticking very, very soon, possibly and likely during this meeting, not meeting, this report, sorry. That's going to be very important. That's going to affect the whole market, especially Tesla. but always be open-minded nonetheless, okay? Even though the odds are favoring a hot CPI, always be open-minded. The data is very manipulated, so be prepared for that. For Tesla, make sure you are ready for both the bearish and bullish outcomes. I am leaning a little more bearish because of the report, but once again, guys, be very, very conscientious, be very cautious, be very, very careful in this insane market. I know the market's been very volatile and it's very crazy. I have some merch for you guys if you're just interested in buying anything. If you want a cap or hoodie or tank top that says to the moon, it's your choice. And finally, don't forget about the Mumu link. The offer is down below and in the description. $100 in an account will get you up to 10 free stocks. Thank you. The market in Tesla to the moon because the long term is very bright. And peace out.